Hi YouTube, happy Saturday. I quickly put together some slides because I wanted to briefly share my experience this week with a disastrous quarter reported by one of my companies, and the loss on my portfolio is the largest loss for a single stock that I've ever encountered. And I've really been looking forward to just sharing a few of my thoughts around that, and I'm not finished with my lessons learned. I've started the list of lessons learned about it, and I'm looking forward to adding more lessons learned, but I'm really interested just to share my experience with this with one of my biggest losers today. Well, this would be my biggest loser so far, and the stock is Cloudera. This is a weekly look, so the quarter was reported this week, and the stock was already down at about $10. They reported the quarter, just a disaster. No other way to say it, especially the conference call. I actually dialed in as soon as I saw the report. I dialed into the conference call, which I usually don't do. I usually wait for the transcript. And it was one of the worst calls that I've ever listened to. And I've listened to quite a few conference calls. And so the stock, you could see, fell off a cliff after it had already declined, and is currently hovering at just above $5. And now this is painful for me. I sorted my portfolio in terms of dollar gain or loss. What floats the top here in terms of loss, you can see I have a $27,000 loss on that single stock position, easily my worst. You can see not even close. The next one is Pivotal Software here, which actually had also a bad quarter, and I actually added on my position. I added to my position on Pivotal because I distinguish these two situations. They're very different to me, although some are lumping them together. But that's another story. I'm actually not too worried about this position, but in terms of Cloudera, you can see I still have $13,000. And why do I have so many shares in Cloudera? Well, this is even more painful to share. My initial position was $10,000 per my usual MO. Usually start a position with 10, and then I added 3 trades. So in 3 tranches, in roughly the same neighborhood. You can see that's my MO. I like to start with a $10,000 position, $10,000 position ballpark. Learn more about the company with each quarter, and then increase my bet if my conviction builds. And so you can see this reflects I was really liking it. I wanted to increase my position, so I added 3 times after the initial position, and so that's why I'm sitting on such a large loss. In terms of the disastrous quarter, we went from annual recurring revenue of plus 21%. which, as part of my ad, I still considered that to be a good growth rate, which I do. It actually had come down from 40% to then 30%, where these cloud companies are expected to grow. But the go-forward guidance is 0 to 10%. So probably let's assume 0, which is pretty much part of the disaster. And then they withdrew guidance for beyond fiscal 2020, and they had offered, there was that guidance on the last quarter, so they withdrew some prospective clarity. They blamed this on 2 things. Distraction due to the merger, confusion. That's the merger with Hortonworks that occurred last year. And even as I was listening to the call, right, this was offered as an excuse several times. And even in the moment as I listened to the call, okay, I knew that was sort of BS because, that they knew the merger was coming. And then some of the explanations were amounted to, well, we were just a little bit surprised. It was almost like we were surprised by the merger. That's what I wrote in one of the Seeking Alpha columns. At some point, one of the answers was almost, we were surprised by our own merger. And I was just I knew in that moment, this is going to be a disaster. And then the other thing, which was more plausible, is that customers are waiting for their new Cloudera data product. And so that's coming out in the summer, and that's plausible. So there was a CEO retirement simultaneous with all of this, and they really spun that with a positive or non-direct, consistent with the whole call, which is non-direct, sort of non-direct spin on that. Obviously he was pushed out. Let's just it's a disastrous quarter, but the company is not dead yet. The revenue guidance for the fiscal year is still $640 million. That's just the subscription. Total revenue is higher. So as some commenters were trying to say optimistically, this is a company still that's pushing on $1 billion in revenue, and that's a true story. And they do have almost 1,000 customers with annual contracts of greater than $100,000. So wanted to be a little bit balanced about that. So one of the things I'm trying to do is become an better investor, and nothing focuses your mind like this sort of thing, and just sort of conduct an autopsy on my own actions. And so that's sort of interesting because in Cloudera's case, I've written several articles for Seeking Alpha, right? When I have a large position like this, my view is also that if I'm going to have conviction, I better be willing to do the work to get to know the company. And I had actually done quite a bit of research, including written some long articles on Cloudera, and including analyzing the financials. I analyzed the proxy. I analyzed the dilution profile. So I can't say that I regret being hasty in deciding to invest in the company or not getting to know it, because I did in April 11, 2018. So that goes back a year. Yeah, over a year. So that was interesting. One of the opportunities I had to avoid making further mistakes in the company, right? I wrote an article doubling down on Cloudera and holding my nose while adding stinky sin stock Facebook. That's because I also added to my Facebook position in violation of my governance criteria. I own Facebook. I think sort of easy money, undervalued, even with the regulatory threats, but it fails. It's the company with the worst governance, in my opinion. And so I'm still sort of figuring out my discipline about that. Governance is very important, but I've obviously made some exceptions in any case. So a year ago, I did add to my position on Cloudera, and you'll note that was after a 40% drop to $13.13. So this is in retrospect what they call catching a falling knife. That's what I was doing. You don't know you're doing the moment. And at that point, I highlighted as part of my case that guidance was still plus 20% revenue growth, and the net expansion rate was 135%. So that's a metric I follow carefully with the SaaS companies, software as a service, the cloud companies. Net expansion rate is analogous. I think of that as same sort sales and retail. That's the dollar increase in revenue with just the existing customer base. So you don't get credit for new customers. Net expansion rate above sustained net expansion rates above 120, 130%. Generally, very strong indications in terms of your stickiness with customers. So, and at the time, they, in terms of the revenue deceleration, they had blamed a need to reorganize the sales force to better position against long-term expansion, customers, and opportunities. And I highlighted this in a slide because if nothing else, I want you to know that this is offered a lot in the early stages of the company, and I haven't figured out what to do with it yet because it's oftentimes legitimate, and other times it seems like a scapegoat. But so clearly in many cases, that's the right thing to do for a young, immature publicly traded company to reorganize the sales force. Clearly that's sometimes very important to do. So I having seen that as a rationale so many times, it didn't really trigger my, show up as a red flag for me. It's a yellow flag at most. So, and then I will say, to my credit, I was mindful of the moment of truth. Nothing profound here, but I wrote about this, and then the call, one of the analysts asked what I thought was the best question. And the question, I put these slides together very quickly. The question on the analyst call that I thought was most relevant was, they asked the CEO, what if this isn't about a lack of focus, but your end market demand deteriorated? So I'm wondering if you could address that, or that are there emergence of any new rivals or old Cloudera use cases becoming less relevant? I highlighted that, put in the article. And as I was conducting my own postmortem about this, I just remembered in my article that that I was at least aware that that was the issue, because I think I'm going to say now, having looked at the last quarter of the transcript, I'm saying that was the right question. Analysts asked the right question, and I don't think I don't think this outgoing CEO was direct about that, and so I was very mindful of this. I paid a lot of attention to his answer, also in the Associated Investor Days, and he was always saying the same thing: no changes in this competitive landscape or end market demand. I now consider that to be false, and I just wasn't. I wasn't skeptical enough. Don't know what to say about that. I took that at face value, and I thought, okay, if that's okay, then this is still going to be, then this is still a solidly growing company. So I will note that while I had been writing articles in favor of, defending my decision, my thesis, that on Seeking Alpha, Virginia Bakatis had written at least 1, 2, 3, 4 articles, and I've just put them here in series just with the highlights, just with the headlines. For example, Google Cloud Platform, Microsoft, and others may dim Cloudera's dream. And at the time of the merger with Hortonworks, hold off on Cloudera and Hortonworks. And I will tell you that I read all of her articles, and especially at the time of the merger. I read this article several times. I really, I commented on it. I really put it through. I really tried to wrangle with it, including like their other investors on Seeking Alpha, in a similar situation, trying to assess their situation. Some of the people that I most respect actually were on I'm going to say, but as I look back on it, the Bulls outnumbered the Bears here. Gary Alexander, who I respect a lot, I end up oftentimes taking the same view, and a couple of other authors similarly informed. We were generally bullish, and in retrospect, to me, it's just very interesting how correct Virginia was the whole time, and she was not a shout. She was not like a pound the table bear. She's just she knows the tech better than I. This aspect of the space, I can see from the article, she knows it better than I, and it's just interesting to me how she was basically bearish, basically skeptical, but balanced, not pounding the table, and in retrospect, correct. Not sure what to make of that, because I was making the best decision I could at the time with the information. I certainly was paying attention to the other argument, and then so I'm almost done. I just wanted to. Someone asked me a question on Seeking Alpha. I haven't quite answered it yet, but I thought this was interesting because it's an understandable question, right? Somebody had said they have read my articles on them and said, notice Dennis here says, there are 2 key things for the stock to bounce. First is a new CEO, and second, the new Cloudera data product release. Provided customer acceptance, etc., if we're optimistic about, and he's done actually a customer or channel check of some sort, and has got some specific insight to cause him to be positive about that. And notice we all need to be very, very patient. I've said before, I think patience is my only advantage in this market. So I have been patient. I have to admit that. And so that's interesting to me because I totally agree. Like if I want to hang on and I haven't sold yet and I want to find my optimism, right? It's absolutely these 2 things. The Cloudera data platform, that's a cloud native platform as a service. So Cloudera is generally in the DevOps or platform as a service space. So they're in a space proximate to Dell's Pivotal that I also own, PVTL. So that's coming this summer, but we don't know yet. And that's one of the reasons that management's blamed some of these problems on customers, sort of waiting to see with Cloudera data platform, which I'm now, having read the quarter, I'm very skeptical of that. I think it's more the case that customers just abandon them for public cloud companies, Amazon, Microsoft, perhaps, who have actually added this functionality onto their cloud infrastructure at a faster rate than I had predicted, right? So that's one of the things I'm sort of contemplating. We think about Amazon. I currently stay out of retail for the most part, or I don't want to be retail because there's the Amazon threat, and I actually, of course, I know about Amazon's AWS. But I underestimated, I believe, the Amazon and Microsoft's their own threat into this DevOps platform as a service space, I suspect. So very interesting to me, this dominance of these tech companies. And the new CEO, of course, that'll be a huge event. If the interim chairman the interim chairman, who's an ex-Accenture guy, sits on several boards, I'm not holding my breath on that, or the current governance. So I agree with these points. However, if I had nothing invested in the company and I came into this freshly, looked at the situation, these two things are just hope, though I don't think they're investable. Waiting for this new product that we don't really know how it's going to take, how it's going to take, or what's going to be the traction, and the new CEO announcement has yet to be made. Of course, hopefully these are catalysts, but for me, this wouldn't be investable if I was evaluating this freshly. So this is, just a case of optimism. So, now that's a lot about my regret. And then I do want to make a mention, about the silver lining. I think I mentioned I'll mention the silver lining, and I titled this, right? Because it's not all a disaster story for me. Why am I not in tears? Well, I made the investment in Cloudera at the same time that I made the investment in two other companies. And I wrote about this. And what I did is, the sequence that I did this is, I having been being trained, I practice code every week and have been for years. I decided I want to be in the data science theme, and there's a lot of companies that are in that theme. But I looked at a list and whittled it down, and I really like Cloudera, and I think at the time Cloudera, in terms of its positioning, I liked that the most. And then what I decided to do is that the more I was looking into it and researching it, the more I just felt overwhelmed by the technology and the different subsectors of the technology, and the fact that even though I have coding experience, I have a blind spot on the technology, and there was more in all of this that I was ignorant about than I felt like I understood. My expertise is very narrow. So feeling overwhelmed, I just decided to do a bit of mini diversification. I'll think of it as mini diversification, and said, okay, I want to be in data science. I really like Cloudera, but I'm gonna pick three companies and just buy a data science cluster, so I spread myself around a little bit. So that's my silver lining, because I'm glad I did that. In retrospect, I believe that Cloudera was my first and favorite. If I've just stopped and made a really greedy bet on Cloudera, I would have extreme regret at this point. But what I did is decided to, in the face of overwhelm and feeling ignorant, basically, I decided, okay, for the because I'm ignorant, I'm going to go with a cluster I'm going to call this the data science cluster. And so I want 3 companies. What are my 3 favorite companies? And I do realize that Alteryx is more, they're serving citizen data scientists, so not direct competitors, but I considered them all at the time to be part of my data science cluster. So Alteryx, Cloudera, Hortonworks, and of course, Hortonworks and Cloudera subsequently merged last year. And then the silver lining is that Alteryx has gone on. So I have my same sort by total gain, and to become, in a short period of time, my largest dollar gain. So I'm sitting on a $25,000 gain in Alteryx, which is more relief than joy at this point, because from my perspective, as part of my data science cluster, and you can see it basically, my cluster is basically break even at this point. And Alteryx, of course, I wish I had just invested in Alteryx in retrospect, but at the time, but that was the cluster decision I made at the time. And Alteryx has been phenomenal, and they're really so expensive. They've been expensive for at least 2 quarters. And even the last quarter, when I went back and look at them, on a valuation, they're so expensive, I wouldn't buy them freshly. But the fundamental performance has just been so phenomenal across the board on this company that I was unwilling to sell it, and still am. So that's my silver lining, that I diversified with the mini data cluster. And then in terms of current reflections, if you've suffered through my 20 minutes so far, longer than I planned to be, I put down, if nothing else for my own benefit, 6 bullets. I'm thinking about current reflections, and this is as far as I want to currently go, because I don't want to read too much into it, but here's what I could say safely. First of all, my silver lining, I'm glad that when I liked the theme and I liked the company Cloudera in the theme, I'm glad that I had, in retrospect, the wisdom to realize that I was basically ignorant and spread my bets around with 3 companies as opposed to 1, right? Especially in tech. 2, I still overestimated my own ability to comprehend the landscape here. I mean, now with the obviously competitive force of overwhelmed, if I'd have been on this full time, maybe I'd seen that sooner. But now I can see that I had too much confidence about that when I started the investment. 3, in this case, wish I had honored my governance screen. When I wrote my first or second article on Cloudera, it was actually about the excessive dilution. As part of my governance, I looked at dilution, and they were just diluting too much, which is a careless sign by management. I really don't like to see that. And I wrote an article, said, it's just way too much dilution. I don't like it. It's not a good signal from management, but I'm going to go anyway. And so I'm really struggling with this, because the more I practice investing, the more I realize that quality of management is, I'm going to say, that's right at the top in terms of importance. And so if we say quality management is important, we have to consider governance to be important. And governance includes the board of directors. And so many companies have weak boards. Facebook, Facebook has a weak board. Okay, number 4. This is very interesting to me, right? There is one of the documented biases, psychological biases in investors, the endowment effect, right? As soon as we own a stock, we think about it differently, and we don't want to give up. Like, I own the Cloudera, and as soon as I added to it the second, third time, as soon as I owned a lot of Cloudera, I cannot deny that I had an endowment effect. I was invested in my own thesis. So it's very interesting to me, as I had 2 very eventful opportunities to cut my losses. And at each time, Virginia on Seeking Alpha wrote a very long article coincident that was an opportunity for me to cut my losses. And I'm patient and also had the endowment effect, hard for me to do. But the first time was a 40% drop. That was before this last 50% drop. I had a chance. And then the merger is interesting too, because, I looked at the merger through rose-colored glasses. So I had my chance there. And then my fifth point here is I have been consuming the analyst coverage like I do along the way. It hasn't been a lot of it. But again, professional analyst coverage has not been helpful. And this just continues to be my experience over and over again. I canceled my Morningstar subscription because the advice on Morningstar is noise to me, especially the fair value. So my general perception of analyst coverage is they follow the price, right? If the price is going up, then you just see the analysts raise their targets. Price is going down, you see analysts cut their targets. If I want to make a generalization of the analyst coverage, I feel like they generally sort of manage to the mean. They don't want to be too far out on the optimism or too far down on the negative. So this is just the case here. The cuts, the price cuts all come way after the fact when it doesn't help us anymore. And even the Morgan Stanley guy who covered it didn't even turn in a report after this last one. So, analyst coverage not helpful. In retrospect, the Seeking Alpha author with expertise in the field, writing very detailed coverage, smart coverage, that would have been the one to pay attention to. And then finally, in retrospect, in this case, management wasn't candid. Part of my process, as I've said, I read those earning transcripts and I read the Investor Day transcripts. Are very important to me. My highest conviction company and structure. I've really gotten to know the players that way by reading it, and I really believe the governance is strong here and the management is high quality, integrity. But it all depends on you believing what you read, the words that they are saying. And in this case, I go back to the last couple of quarters and the explanations. I can't find any other interpretation except to put this as nicely as I can, and that is that there was a sense in which management was not completely candid, and this was absolutely true in this last disastrous call. I mean, we talked about it on Seeking Alpha. The analysts were overly polite in asking direct questions, and then management was really trying to put up a kumbaya on this. This was really on this last call. They're really trying to still put lipstick on a pig, failing to be direct. And my point was, on Seeking Alpha, I made a comment contrasting their tone with the CEO of Hewlett Packard. On the CEO, the Hewlett Packard, on their last call, last quarter, the quarter before last quarter, they hit a snag and had a problem. Stock was hit, and it's a fascinating call because the CEO of Hewlett Packard beats himself up way too much. Jim Cramer made this observation, but he put a flashlight for investors on exactly the problem that Hewlett Packard was having, and there's just no doubt about the CEO taking direct responsibility. I stayed in that company. I love that. I consider that just a fabulous thing for management to do, be direct about negative news. In this last call with Cloudera, it was just funny how the CEO was not. And all of the answers were, how can we paint this rosy? Not nearly, just a sharp contrast in terms of taking responsibility. So, I don't know what to do about, how does that, I don't know how that informs what reading the transcripts going forward. Just more a lesson for me to be, even more careful as you read the words that management are saying. And so that's my sixth point. And so this video's been longer than I thought, but I hope this real life experience with what for me is absolutely been a mistake. There's just no other way to color it, right? There's been a mistake. And then my intention with this mistake and this investment is to learn the lessons from it. How can I want to become a better investor? What are the lessons I learned? Those are the ones I'm going to start with. And I'm sure there's more to come. But have a great weekend and thank you for listening. Bye.